Hello and welcome to our session on SPACs, Ag, and Japan at Global AgInvesting Asia 2021. We are so pleased to have all of you with us today, and we have a dream team of bright minds to help us understand what is a SPAC, why is it taking over the news headlines, and how can you get involved? So I want to welcome our team from Morrison Foerster, Mitsutoshi Uchida, in the Tokyo office. He's a partner. We've got Mitchell Presser in the New York office, who's the co-chair of the Food and Ag department and the corporate practice. And we have Jeremy White, who'll be leading the discussion. He's based in Tokyo and is partner with Morrison Foerster. So Jeremy, thank you so much for bringing us through it. And I will speak to you at the end.
Thank you, Kate. So my name's Jeremy White, as Kate kindly said. I'm a partner in the Tokyo office. I've been based actually in Tokyo for 14 years. I've been practicing for over 20 years, and it's a great pleasure to be able to give this presentation. Maybe Mitchell, would you like to say a few words?
Sure. I'm Mitchell Presser. I am based in New York. I'm the co-head of the Global Transactions Group at Morrison Foerster. Our group is a total of over 400 attorneys in 16 offices on 3 continents. I'm also the co-head of our Food and Agriculture group and of our SPAC group. And since we're here to talk about SPACs, over the last 18 months, we have worked on over 40 SPAC transactions across the globe, including IPOs, PIPE transactions, which we'll talk about during our session, and de-SPAC transactions, which is the merger that a SPAC does in order for it to acquire or merge with a company. It conducts a business combination that's called a de-SPAC.
Fantastic. And maybe Mitsutoshi, a few words by self-introduction.
Thank you, Jeremy. I'm Mitsutoshi Uchida, a Japanese qualified lawyer in the corporate department of Morrison Foerster. I have practiced in Japan for more than 2 decades with a focus on capital markets and mergers and acquisitions. We have more than 120 attorneys in Tokyo from Japan, US, and other jurisdictions, covering all major practice areas. We are uniquely positioned, having capabilities to provide one-stop Japan and US legal services. In cross-border M&As like SPACs, we closely cooperate with attorneys at offices in the US, Asia, and other jurisdictions.
Fantastic, thank you. And just to wrap up the introduction, so to put it in context, MoFo is one of the largest law firms in the world, and we have particular strength in Japan and in the US, as well as Europe and Asia. And actually in Japan, we are the largest of the international law firms here, and we're the only law firm which is rated tier 1 by each of the 3 independent legal journals. So perhaps we can kick off with a few questions. Maybe Mitchell, why SPACs? So can you tell us, in summary, what are they, where have they come from, and what is the state of the current SPAC market today?
Thanks, Jeremy. I think that's a great way to start. Let's start with what a SPAC is. It's sort of simple and complex all in one. It's just a shell company. A SPAC, a sponsor or a group will raise a SPAC. They'll go out and conduct an IPO, and what they're doing is they're forming a company to go out and look for an operating company to merge or combine with. And they raise capital, they raise cash in an IPO, and then they take that money and they actually put it in a trust account. And they keep that money separate. Why do they do that? Because when the investors come in, they're coming into sort of a blind pool, and they want the opportunity to know what the SPAC will ultimately merge with to decide if they actually want to stay in when that combination happens. So the money sits in a trust account, And at the time that the SPAC identifies a target and signs an agreement, the SPAC investors are given the opportunity to decide whether they want to stay in that investment or whether they would like their money back. So the SPAC then goes out, and once it raises this money, and it goes out and looks for a business to combine with. And, you know, one thing I should say is when they raise that money, they raise both common shares and typically warrants as well. So they raise units. And that'll become important in a minute or so. And the SPAC goes out, looks for a private company. What they're looking for, especially these days, is a company that will do well in the public markets, where becoming a public company will be an interesting opportunity for them. And I say that because in the last year and a half or 2 years, the primary use of SPACs has been an alternative path to an IPO for a company. So the company will come together with the SPAC. They'll agree on a transaction, and when they merge or combine with the SPAC, they will then become a public company. So this is, has really become an alternative path for IPOs. So we'll talk a little bit more about SPACs and that process as we go through the session. But I want to go back to something you asked, Jeremy, which was, why did they become so popular? Sort of, they seem last year to have almost come out of nowhere. And they didn't really come out of nowhere. They've been around for over 30 years. But the vehicle, the SPAC vehicle, has really evolved over that time period. If you look back, even just 5 years ago, these were typically used to do more of a public LBO than an IPO. So the SPAC sponsor would go out, they'd have this SPAC, they'd have this equity, and then they'd go out, they'd raise debt, and they'd buy out a company. That model had not been that successful of a model because of that redemption right that I described before. Often investors looked at it and said, you know what, we don't like this deal, and they would vote it down. And the reason they would vote it down at the time was because of those redemption rights. If they didn't like the deal, they would want to redeem, and in order to redeem, you had to vote against the deal. Now that changed a few years ago, and that really started the evolution of, what I would call the success of the SPAC, because what they did was they separated that redemption right and the vote in favor of the deal or against the deal. And what happened was, once that changed, you could now vote in favor of the deal, but still ask for your money back. You might say, why would you do that? If you don't like the deal, you don't like the deal, why don't you vote against it? Well, it goes back to what I mentioned before about that unit of common and warrant. Because if you redeem, you only redeem your common stock. You get to keep your warrant, even if you choose to redeem. Now, if you voted against the deal, that warrant wouldn't have any value because there'd be nothing there. But because if you approve the deal, now you may not think it's the greatest deal in the world, but you have a warrant that's going to give you upside for the next 5 years. Now, why would you ever vote against the deal? And I think that is sort of the key to the beginning of the evolution of the success of the SPAC, because that enabled what I would call execution certainty. And that's really important, because now when a company decided that they were going to combine with a SPAC, instead of worrying that, most SPAC deals get voted down, they now see pretty much every deal gets voted in favor. So once you sign the deal, you know that the shareholders will vote in favor of it. And that's the beginning. When we look at SPACs today, they deliver much more than just execution certainty. They also deliver certainty around valuation and liquidity, the amount of capital raised. Now, how did that happen, and why did this take off? So how do we get to valuation certainty? So, if you own, Jeremy, you own a great tech company, a great tech business, and you think it's worth $1 billion, and you think it should be a public company, and a SPAC approaches you, you have a conversation with them and say, okay, well, sure, I would combine with you, and I'd love to go public this way. I think my shares are worth $1 billion. Let's assume they agree. How do you get to that certainty around valuation? Well, when the SPAC raised its money, it raised its money at $10 a share. So they'll say to you, okay, Jeremy, well, company's worth $1 billion. We're going to give you 100 million shares. That's $10 a share. That's $1 billion worth of stock. You sort of say, that seems right. But of course, number one, how do you know where it's going to trade? And more importantly, part of why you're doing is because you want to raise capital. That same SPAC that's offering 100 million shares also says to you, and look, we raised $200 million. When we combine, that $200 million is going to be in the company and is going to be available to you. And you say, oh, well, this is really great. Except, didn't I hear something about redemption rights? And that sort of breaks a lot of that certainty. You sort of say, wait a second. If all of that 200 million can just ask for their money back, then maybe I'm going to raise zero. And that was a fear. And this is part of what happened last year, and I'll explain it in context in a minute. But the SPACs understood that challenge, and the targets understood that challenge. So the SPAC said, you know what, Jeremy, I understand your fear. Before we announce our deal and before we sign our deal, we're going to go out and raise what's called a PIPE, a private investment in a public equity. And we're going to go out to investors who usually invest in IPOs and say, hey, this is really an IPO, and this is a great IPO. Jeremy thinks his company's worth $1 billion. We think it's worth even more. This is a great investment opportunity. And they'd go out to public company investors like Fidelity, Wellington, Vanguard. They go out to hedge funds and say, this is a great opportunity. Come in and you'll get a great allocation. IPOs are so competitive and they're good. You're going to get a great allocation. You can decide now, and we're going to raise $200 million as well. And they would do that. And then all of a sudden, you had certainty around execution. They validated the valuation because, if Fidelity's coming in and agreeing that your company's worth $1 billion, well, that says a lot. And they also assured the liquidity. So even if shareholders redeemed, you would still have $200 million coming to the company. Now, of course, if shareholders didn't redeem, you'd now have $400 million coming to the company. And you'd have to make sure you were happy with that much money coming to the company, but you'd balance it. But that provided sort of the certainty around execution, valuation, and liquidity. And the PIPE was a very key part of creating that certainty. Now, okay, so I've told the story. Well, why last year? Why not the year before? Well, the pandemic was really sort of an accelerant on all of this. And we'll see in a couple of minutes when we look at sort of the time charts of what happened. But really, people were going along and they were saying, oh, SPACs, we've heard about these things. They've been around 30 years. I'm just going to do an IPO. But then all of a sudden we hit March, April, May, and liquidity in the markets disappeared. You wanted to raise capital, you go to a private equity fund or a venture capital fund. They said, we have to focus on our portfolio now. We're not going to allocate new capital today. We can't predict the future. How are we going to make an investment with all this uncertainty in the market? Same thing happening in the IPO markets. And the SPAC sponsors sort of raised their hand and said, hey, look at us. We can actually provide this certainty. Let's take a look at it. And things took off, and we'll look at some of those charts in a minute. But to my mind, the pandemic was really the accelerant. The financial product, which is really what a SPAC is, was there. It was already evolving and was sort of working its way there. But once the pandemic happened, this was a huge accelerant. And that's really what we saw happening in the U.S. last year. And I don't know, Mitsutoshi, do you want to share what have you been seeing in Japan?
Sure, Mitchell. At this moment, there is no SPAC listing market in Japan. SPAC is an innovation because in Japan, underwriters and the stock exchange conduct a listing review. So company can go public only if it demonstrates that it satisfies the listing criteria, including the corporate governance and financial requirements or certain high growth potential. But in this SPAC, a sponsor, stockholders, and PIPE investors will decide whether the target company can go public. So this is a big difference from the current Japanese listing system. And so far, there has been no de-SPAC with a Japanese target company. But we are aware that some SPACs have shown interests in Japanese companies. We are now advising a client on a potential de-SPAC with a Japanese company, which may be the first de-SPAC in Japan, depending on the timeline.
Gosh, that is fascinating. And Mitsutoshi, it's wonderful to know that you're acting on what is probably going to be the first de-SPAC in Japan. So taking all that into account, how much are we actually talking about here? Do you have any stats about dollar volume or value regarding SPACs, but also de-SPACs? Maybe Mitchell.
Funny you should ask that, Jeremy. We do have some stats on that. So if we start with the first slide, this is the story of what happened last year, and again, fortunately, aligns very nicely with my thesis around the pandemic, right? Sort of March, April, the markets start, shaking a bit. A SPAC IPO takes approximately 2 months to get done, maybe slightly more. So if you look March, April, there are a few SPACs every month. In fact, if you look back at 2019, I think there were a total of about 59, I think was the number, of SPAC IPOs in 2019. So you're going along at a pace that's probably, going to get you somewhere near there again. And then all of a sudden, April, May, June, and that's when people started to understand the strength of the SPAC and the excitement about it. And all of a sudden, by July, we're seeing 18, 26, 38. You get to October, which is about 4 or 5 months after the pandemic has really hit, and we have 50 SPAC IPOs, almost as much as we saw in the entirety of 2019. And the market's very strong. And really, when October happened and there were 50 IPOs, essentially more than 2 SPAC IPOs every trading day that month, the market sort of took a little bit of a breather. And they said, you know what, maybe this is too much. And November, December, a little bit of a slowdown, but then starting, building back up quickly. And then all of a sudden, after the beginning of the year of 2021, we saw it take off, and we had 3 months where there were almost 100 SPAC IPOs a month. So the first quarter of this year, we saw a huge volume of SPAC IPOs. And then a few things happened. The market started focusing on the fact that there were probably about 400 SPACs out in the market looking for partners, and started wondering, will you really be able to find that many good private companies, in sort of this moment in time that were appropriate for IPOing and becoming public companies. You also start to see some, and we'll look at the pattern of de-SPACs in a minute, but some of the de-SPACs that were happening in the middle to end of 2020, a lot of these were technology companies with little or no revenues that were coming public with long-term projections of greatness. And some of them, and many of them hopefully will in fact you know, live up to those expectations. But we started to see, you know, some number of companies where very quickly they weren't really hitting their targets, and the market started to get nervous. The SEC also jumped in. When the SEC saw the Securities and Exchange Commission, which governs IPOs and securities trading, they started to really focus on this, and they didn't stop it, but they started to put out pronouncements that were sort of warning signs. Things like, hey, SPACs, you better realize you're subject to all the securities laws. And they started to do some accounting analysis and raise some questions about how the warrants were treated. So all things that came together to slow this market down. And, you know, it's been 6 months and it has remained slower. What we are seeing is, if you look at the last few months, we're actually seeing 20 to 30 SPACs per month IPO. And then if we turn to the de-SPAC chart, because I think that now integrates well, if we look at the last 6 months, February and March, we see a lot of de-SPACs. We're really seeing a cadence of about 20 to 30 de-SPAC transactions per month. So we're now starting to see a little bit of an equilibrium. There are still a lot of SPACs out in the market, but SPACs have 2 years. I didn't mention this before, but a SPAC, when they raise their money, they have typically a 2-year period, sometimes a bit shorter, to find a partner. Otherwise, they have to give the money back. So with that 2-year cadence, I think we are starting to see some equilibrium. But, again, I think this is really interesting because, again, that alignment with what happened with the pandemic. We see, April and May, it takes a little time to negotiate a de-SPAC transaction. But now all of a sudden June comes and we start to see that steady increase. And again, we get to the end of the year and the beginning of this year, and we see much higher activity. And the cadence in September was a little bit slower. But for the most part, we're seeing, that 20 to 30 de-SPAC transactions, which again, I would argue, even though the markets are choppy today, is a pretty positive sign that we've seen to have found that equilibrium.
That is fascinating to see this huge wave in SPACs now followed by this huge wave of de-SPACs. In a way, it's the yin and yang together. So that's the situation coming out from the US, and it's impacting global, presumably. Mitsutoshi, from the perspective of Japan, what would you say is the current state of the market here?
Sure, Jeremy. As I mentioned, for now, Japan does not have SPAC listing system or active de-SPAC market. But Japanese regulators have recognized potential benefits of SPACs. They recently started discussion about introducing SPAC in Japan. And the Cabinet Office published the Growth Strategy Action Plan. SPAC is mentioned as a tool to promote and expand startup ventures. Tokyo Stock Exchange Study Group is discussing introduction of SPAC listing system. And this is consistent with the trends in Asia region. And recently, a Singapore exchange introduced the new SPAC listing framework. Also, Stock Exchange of Hong Kong published a proposal to create a listing regime for SPACs. But discussion in Japan is still at the preliminary stage. Investor protection is key consideration that will be reviewed by the Japanese regulators. So it will take time for Japanese SPACs to be allowed for listing in Japan. For now, market participants have more interest in these SPAC transactions, where US SPACs acquire Japanese private companies. I think there are potential demands for these SPACs by Japanese target companies. For example, Japanese private companies may be attracted by higher valuation in the US market. Also, companies may have a need to raise capital or restructure its business by making its subsidiaries go public or carving out a part of its business. And so far, there has been no de-SPAC with a Japanese target company, but some SPACs are seriously looking into de-SPACs with Japanese companies. As I mentioned, we are working on a potential de-SPAC with Japanese company. Also, we often receive requests for seminars and inquiries about the SPACs from investment banks and corporates. This shows there is a high potential demands for this SPAC in Japanese market.
You know, Mitsutoshi, I think we're seeing something very similar. You know, SPACs are always looking for new places to invest. There's, again, we saw there were over, almost 400 SPACs still looking for targets. So they're trying to find areas where there's less competition with other SPACs. So they're constantly looking at new industries and new geographies. We've done a number of de-SPAC transactions over the last 6 months in Asia, primarily Hong Kong, China, but we're seeing a lot of activity over other regions. We're seeing it in Latin America, but we're also seeing a lot of interest in figuring out how to do successful de-SPACs in Japan as well.
So we're seeing, so with this huge rise of SPACs in the US, we're seeing now the SPAC regulations being considered by the Japanese regulators, and yet at the same time, de-SPACs have come out from the US. You're using US SPACs to do de-SPACs across Asia and now into Japan. That's fascinating. From a geographical perspective, that's fascinating. But how about from an industry perspective? Because, if you read the newspaper maybe 6 months or 12 months ago, it seemed that SPACs were quite connected with the tech industry, but perhaps that's changing. Maybe it's moving more into food and agriculture. Mitchell, what do you think?
So I'll sort of keep bringing us back to the fact that for the most part, a SPAC is an alternative to a traditional IPO. And because of the certainty, sometimes, even a favored alternative to an IPO. So you're right, Jeremy. We've seen a significant amount of activity around various parts of the tech industry because tech is a very popular area for IPOs. That there's a strong desire among IPO investors for technology companies, and they make sense in IPOs because of the growth opportunity, the ability to use capital to accelerate growth. But as I also mentioned, SPACs are constantly looking for new areas to focus on, and they look at different industries. We've seen sort of waves of industries, but the food and ag space, especially where it overlaps or reaches the tangent with technology, has become very interesting. We've seen, say, at least 15 to 20 SPACs that describe a focus on the food and agriculture industries, especially tech areas. We've seen 8 de-SPAC transactions announced or closed in the food and ag industries, especially around ag tech. We see Benson Hill, Aero Farms, App Harvest, among others. So there is a lot of excitement around this. And if we think about how well agriculture, especially ag tech, also overlaps with ESG themes, things like sustainability. So companies that are driving regenerative agriculture, controlled environment agriculture, things that are environmentally friendly, and will seem to have very big future opportunities. I think the overlap is natural, and the growing demand for food and the need to provide it and to provide on a sustainable basis, I think is very attractive to the public markets. So I think this is going to be a continuing theme, and we're going to continue to see a lot of interest around companies like this for IPOs and very much de-SPAC transactions.
Okay, so it's clearly there's a lot of momentum with SPACs and de-SPACs in the food and agriculture industry, as we can see from some of the announcements which have come out. But looking at it from the perspective of Japan and taking into account how many Japanese trading houses are invested into the food and agriculture space, and how many Japanese corporates are also invested in that space, what makes SPACs and de-SPACs so interesting for them? So why are they so interesting from the perspective of the target company and also the perspective of the shareholders and investors? Mitchell.
So if we start with the shareholder perspective, and we continue the theme of the SPAC as an IPO, if we look back historically, I mentioned before, the SPAC was really looking for public LBOs, but these last 2 years have shown that the great success is in this sort of IPO alternative. I think it helps us understand the shareholder perspective because it's become very, very popular with companies that have been funded by private equity and venture capital, because they're able to help their companies raise more capital, do it at very favorable valuations, typically, sort of the public company valuation. And for companies that want to grow by investing in R&D, they need capital. They want to grow by acquisition. They either need cash or they need a currency to do those acquisitions. So we've seen a lot of popularity with private equity and venture capital investors, and it has the added benefit for them where they can keep funding the company and maybe even start to take a little capital off the table so they can return some money to their investors, sort of very favorable returns, but also continue on growing the company and hopefully creating more value. So I think for the private equity and venture investors, in fact, for the founders who have grown a business and may be looking for an alternative to taking private equity money and taking in, a real partner or maybe even a controlling party, that's become very attractive. But I also think there's this other group, which is the corporate shareholders. And I think this is ultimately very relevant in Japan. If you own a business that's really could be a standalone business, either a subsidiary or a division, this could be a really interesting way to grow that business, especially if you don't want to continue to invest more of your own capital in it, but again, want to have a company that will grow and can start to grow a bit independently. You can do the same thing. You can enter into a de-SPAC transaction. You'll still typically have control. You'll have more than 50% of the business after the de-SPAC transaction, but you'll also be able to raise capital without having to give special rights to new shareholders coming in or giving them any priority rights. And you also may have a company that can accelerate its growth because it's outside from under a larger corporate. So a little freer to make decisions, freer to be potentially a little more aggressive. And if you think about some of these businesses, there are a lot of founders of businesses that don't want to sell to a big corporate, but would be very happy to be part of a growing independent public company. So it may give you the opportunity to access other businesses through merger, providing both cash and stock or just stock, and can be really interesting for corporate shareholders. And I would argue, I would think the Japanese trading houses, many of them have very interesting agriculture businesses within them, and ag tech businesses that might, benefit from this type of opportunity. Mitsutoshi, do you think that makes sense?
Yeah, Mitchell, I agree. This SPAC will offer good opportunities for Japanese companies to raise capital in this, current environment. As you said, many Japanese trading houses and corporates have existing agriculture investments, and they can be candidates of these SPAC targets. As Mitchell mentioned, certainty of the deal is a benefit of this SPAC. Also, Japanese targets may find the US-style valuation more beneficial than the pricing mechanics in a traditional IPO. I think there are good reasons for Japanese companies to choose this SPAC as their financing and exit strategy.
Okay, so that seems, to be frank, very optimistic. And the future is rosy, particularly in the context actually of Japan. But maybe from the lawyer's perspective, after all, we are lawyers, what would you say are the key issues and risks that we need to overcome, assuming a non-US demerger target and a foreign entity, for example, a Japanese target? Mitsutoshi, what are some of the issues that we would need to deal with there?
Yeah, thank you, Jeremy. There are several possible structures for doing a de-SPAC with Japanese target. Tax analysis is a primary factor for determining the structure. Also, if the SPAC is a US company, parties may want a Japanese or other non-US company to be a post-merger listed entity so that it can enjoy the benefits for a foreign private issuer, including relaxed US securities disclosure obligations and mitigating other legal risks, such as US shareholder litigations. For a Japanese target, one of the challenges may be to prepare US GAAP or IFRS financial statements audited by PCAOB standards. A subsidiary of a global Japanese company that already reporting IFRS financial statements may be easier to handle this requirement. But other private companies that are aiming to conduct a domestic IPO in Japan would not have sufficient resources, and they would need to spend additional time to prepare those financial statements. And there are also special issues under Japanese law that applies to this SPAC with a Japanese company. First, foreign exchange regulations. Japan recently tightened foreign direct investment regulation in order to protect Japanese companies from being acquired by foreign investors. When any foreign investor acquires shares in a Japanese company that conducts certain designated business, generally speaking, each foreign investor must obtain clearance from Japanese regulator or make post-investment report. As the post-merger company is traded on the public market, and requiring such clearance or reporting by each stockholder is not practical. So parties may need to use a non-Japanese company as a listed entity, or if the Japanese company will become a listed entity, then American Depository Receipt, ADR, may give a solution to this issue. Second, under Japanese corporate law, a Japanese company cannot directly merge with a foreign company. So it is necessary to use a triangular merger or a dummy structure so that the SPAC and Japanese target will form parent and subsidiary relationship after the merger. Finally, if a Japanese company will be a listed entity, there are other legal considerations. such as steps for issuing stock for a triangular merger, terms of the warrants, and so forth. Japanese corporate law is less flexible than US or Cayman law. So advice from Japanese legal counsel is essential from the early stage of structuring discussion.
So it does seem from the perspective of Japan that there are hurdles, technical hurdles that need to be overcome, but it also seems very clear that they can be overcome. So that's great to know. From a Japan perspective, but maybe from a global perspective, Mitchell, what are you seeing in terms of overall the hurdles and the risks associated with SPACs and de-SPACs today?
Well, I mean, the obvious one is always execution. Is there a risk that it won't get done? But I think the major risk we're seeing today is all around redemptions and liquidity, the amount of cash coming into the company. And you can't necessarily control the redemptions. We talked about the pipe a good bit and how the pipe provides that certainty around the amount of liquidity coming into the company. In the current environment, the pipe has been the great challenge. We saw sort of the slowdown. Pipe investors are looking for a high level of, maybe the right word isn't certainty, but maybe it's confidence that the stock is going to perform well. And they've been very skittish because we've seen a number of de-SPAC transactions not perform well. So the real challenge in today's environment is bringing in the pipe investor so that you can bring in the certainty around liquidity. And pipe investors are looking for a more certain transaction than just, I'll buy shares at $10 a share and I'll agree. I don't have redemption rights like everyone else. So I'm agreeing at the start before you announce your deal that I will buy shares at this valuation. So what we're seeing is a lot of creativity in the marketplace. Pipes are now moving from what they were 6, 9, 12 months ago, which was just an investment in the common stock at a committed valuation, to more structured securities, convertible debt, convertible equity, preferred equity, or a combination of not just the common stock, but some warrants, or the sponsors may commit some of their shares in connection with the transaction. So we're seeing a lot of flexibility and creativity in order to get the pipes done. Having said that, I don't want to paint a more rosy picture than is out there. It's a really competitive and challenging market today. But we've certainly seen over the last few months more creativity and a pickup in activity. And, I sort of, like the glass is half full perspective, which is, for investors, choppy markets usually mean greater opportunity. And I think we're in that market today, and there are a lot of good companies, and we're going to continue to see pipes evolve because they will help get these transactions done and provide that certain liquidity. And we're going to see the pipe investors, create new securities and negotiate new structures in order to create comfort around the investment, but provide that liquidity to the marketplace. And we're seeing a lot of that. We're watching it evolve today. And I think long term, I'm very optimistic that this opportunity remains very strong, and investors will continue to find ways to access these markets and leverage the value that the SPAC product has created. If you think about it, this could also be, we were talking a lot about the trading houses. this could really be an interesting opportunity for a corporate investor that likes the industry and can now find an opportunity to take a significant position in another company that's going public and create an investment, because these aspiring public companies need that investor to help get the SPAC transaction done. So there, once again, I think in Japan, it could be a very interesting opportunity as well.
And Mitsutoshi, you would echo that.
Yeah. Yeah, as I mentioned, there are some local hurdles for US SPAC to merge with Japanese companies, such as financial statements, corporate law, and the foreign exchange regulation. But I believe there are some ways to address these matters. And if the deal size is sufficiently large, the benefits of this SPAC outweigh the relevant costs. I hope we can see a successful de-SPAC in Japan in the near future, and then other deals would follow. And this leads to development of the SPAC market in Japan.
Yeah, gosh, well, it's certainly a very exciting space to be in. So maybe I think we've touched on all the key points, and now might be an appropriate time just to sum up with a few words of concluding remarks here, bringing it all together. So Mitchell, you started off by explaining that there has been this immense evolution in SPACs and de-SPACs in a very rapid period of time since the pandemic. And what SPACs and de-SPACs have given is certainty. And that's what's made them so popular during this testing period of the pandemic. Certainty on execution, certainty on liquidity, and certainty on valuation. And it is that certainty which has led to this huge increase in SPACs, and that increase is now permeating around the world, with the US being the hub of innovation when it comes to this area. And that trend is now coming to Asia, as you said. You said that you've been seeing it in Singapore, you've been doing deals in Hong Kong and across Asia, and now, as Mitsutoshi relates, it is now coming to Japan. And here we are working on de-SPAC transactions in Japan. So the Japanese situation is very interesting, and thank you for explaining that, Mitsutoshi. So the regulators are actively looking at this right now. We have the Tokyo Stock Exchange with its paper. We have the Cabinet Office, Prime Minister Suga, publishing that in the summer. This is very much an area of change and review. So it's so fascinating to see it from a geographic perspective, and also now this industry perspective, that we're seeing it originate with the tech industry, and now it's come across in particular to the food and agriculture sectors. And that's because of the three certainties: execution, liquidity, and valuation. This ability to raise more capital through the pipe. And to be frank, from a Japanese perspective, we can now tap valuations directly in the US public markets with our higher valuations than in Japan. That's fascinating, and it makes sense as to why SPACs and de-SPACs are now becoming so popular, including in this industry, in food and agriculture. So Mitsutoshi, you talked about the technical hurdles, but it seems, as we mentioned about the TSE paper and the Prime Minister Suga and the Cabinet Office papers and the consultation papers, that regulatory change is happening. But even so, even today, de-SPAC deals can be done. You're working on one. And that's because with clever structuring, we can get over many of these hurdles. You mentioned ADRs, you mentioned triangular mergers, you mentioned dummy structures, and so on. So Mitchell, you in your concluding remarks, you mentioned about how the market has been choppy, and we saw this huge raise in SPACs, but that has now dropped off to some extent. But to be frank, it's been followed up by the yin and yang, by the de-SPACs. And so now we've seen this huge rise in de-SPACs. And even the number of SPACs now today is higher than it was a couple of years ago before the pandemic. So this wave of SPACs and de-SPACs that's come out from the US has now hit Japan, is now hit the food and agriculture sector. And with the regulatory changes, it's going to be even easier. But from our perspective here, it's already possible to go and do it. And so we have seen this wealth of experience being generated in the US and has now come over and is impacting into Asia, across Europe, and here into Japan. So I would like to say thank you very much, Mitsutoshi, for the time that you've given us today. And Mitchell, thank you very much for the time that you've given us today. It's personally been very educating for me. And I'm sure that those who are attending this talk will be able to reach out to yourselves at any point if they have any questions or queries. This is such a dynamic area. I'm sure that there are many questions, and I'm sure that you will be very happy to assist. Kate, thank you for putting this together, and over to you.
Thank you so much, Jeremy. Thank you, all of you. That was a really fascinating discussion. And it sounds like with all of the moving pieces, it's going to be very important to have very well-versed, skilled, and trusted counsel on your side when doing these types of deals. And Morrison Foerster is certainly the best in the business for that. So I do encourage all of you to reach out to these brilliant minds and pick their brains a little bit on what your next move in the SPAC space might be. I have a couple of questions, and they may be a little bit elementary, but I wanted to take it back to sort of the beginning. When a SPAC is formed as the shell company, and they go out and they raise all of this imaginary, fantastic money, do they have to indicate a certain mission statement? Are people investing blindly in them? I know that, Mitchell, you mentioned maybe there were 40 or 50 sector-focused SPACs for food and agriculture, but are they going out with their target companies in mind, or are they going to figure that out later?
So I'll take this one. Yeah, I think it was sort of 15 to 20, could be a bit more, who have really specifically either focused on or mentioned the agriculture, ag tech industries, but it's not required. So a SPAC can come out with a very open, sort of potential of what they're going to look at. What we saw as more and more SPACs came out, there was a trend towards specificity and focus. Just like you've seen in, private equity industries and the venture capital industries, as more money gets raised, investors tend to get more and more focused. And in order to raise the capital, I think the SPAC investors wanted to understand better, well, why am I investing in you? What's your special sauce? What are you bringing to the table? So we are seeing, and we have seen much more focus and specificity. Typically, the SPACs preserve the right to invest in anything that they like, and the investors have redemption rights that sort of protect them if they think the sponsor is venturing too far from their expertise. But we definitely see, if you read the prospectuses, you see a lot more focus on specificity and sort of explanations of why this sponsor and this focus.
Okay, I find that helpful, and I hope some of you do too. I think that, it's hard for me to imagine going in blind on something like that, but I guess the explanation is that they have that protection on the redemption side. So I think it's been, I have a long history in working around ag tech, and one of the major complaints from 2010 even to now is that blockage of the pathway to public markets. And I wonder why this has been for ag tech companies specifically that I've known for years who are now finding their way through this. Why does it seem like the barrier has been lifted through this model versus them taking their own company public?
So I think that because of the way SPAC and de-SPAC transactions happen, there's a much greater opportunity to hone in on the right investors and to tell your story. It's being done in private. It's being done before you announce the transaction. And I go back to your first question, because I think they actually integrate quite well, which is as a target company, as a company looking to go public, it's not just about the investors picking a SPAC sponsor and whether or not they know the industry. For the companies looking to go public, a sponsor with expertise and with relationships with other investors and who can help tell the story of the opportunity can also be very valuable. And when you bring that together in this marketplace, where you have the ability to go out and tell that story before it's all public. So you have a little extra time, you have a much greater ability to focus rather than a 1-week roadshow where you're going from, at least you used to be going from city to city, now you're going from Zoom to Zoom. But you're going from city to city and just sort of, having these big lunches and breakfasts and dinners and, speaking to people at all different levels. You're doing one-on-one meetings. They're very focused. You're picking your investors and you're telling that story. And the SPAC enables you, the de-SPAC process enables you to tell that story in a thoughtful, coherent way, in, investor by investor. And, and then there's the whole ESG element. The markets have certainly gotten very excited with ESG, and ag tech really melds nicely with that. So, we're seeing it in the private markets as well in ag and ag tech. We're seeing a lot more investment in the space there as well. I think, ag tech is, finding its moment. And so I think that all of these pieces come together, but the de-SPAC is particularly well designed to help tell that story that maybe your typical IPO might not always do as well.
Got it. And just one more point of clarification for me, when the de-SPAC happens, all of the venture investors that might have come before, or corporate investors, are they having exited at that point, or do they come along for the ride?
So what we've seen in the last 18 months is very few founders and called backers are exiting. We're seeing, it's certainly not impossible. It's really a market question. How will the market react to investors selling and taking money off the table rather than staying in? And I'll never miss out on sort of, mentioning the pipe investors. So much of this is about the pipe investor. How will the pipe investor feel if the venture fund is looking to cash out? Typically, they're all signing agreements to not sell for anywhere, on average 6 months to a year. And sometimes they have earlier releases if the stock is trading very well. But if you need, for sort of the simple answer, there's not a lot of exiting at de-SPAC. It's really beginning the next stage.
Okay, so thank you, Mitchell, for that clarification. Jeremy, I wonder if you could help me with just one more. When you have raised your money as a SPAC, are you limited in the number of de-SPACs you can engage in?
That's a fascinating question, and I'm glad you asked it, because that is actually a source of a lot of misunderstanding. It is 1-1. So you raise one SPAC, and that will lead to your one de-SPAC. So it's just one.
Okay, thank you. And so you have to kind of I'm just going to follow up on that one. When you're doing the initial raise for the SPAC, you kind of need to know what company valuation you're going to be going after for your de-SPAC, right?
So, and I would also ask Mitchell and Mitsutoshi if you have any views on that. I think the answer is that under the US listing regime, you actually need to not have any preconceptions. So you don't have any specific targets in mind.
So you can just raise and raise and raise.
Well, Kate, I think I would. Jeremy's point is really important. Under the U.S. securities laws, the whole idea of this shell company is it's sort of a blind pool. You don't know. You may know the area, you don't know the company. But the interesting thing about the SPAC is you can do as large a deal as you want with any SPAC because you're going to give most of the shares to the target company. So if you find a company that has $1 billion valuation, it doesn't necessarily matter that much whether you're $100 million SPAC or a $200 million SPAC. It matters how much money are you bringing in to the company. The company is trying to raise a certain amount, but because they can't predict redemptions, how much cash is in the trust isn't always as important as how much of a pipe do you raise. So once again, the size of the pipe is going to be much more important than the SPAC. And we didn't talk about the economics of the sponsor, but the sponsor gets a really nice deal when they raise a SPAC. They get, they call it 20%, but it's really 25% of the money raised. It's 20% on a fully diluted basis. So if you raise $200 million, the sponsor automatically gets $50 million worth of stock as part of that without adding any money. They then typically add money for operating expenses and they get additional warrants at the same time. But because of that, that sponsor equity creates dilution. So you've typically seen that the relationship, the size of SPAC to size of target is often at least 4 or 5 times. So the target is much bigger than the SPAC. So you certainly don't need to be anywhere near perfection when you raise your SPAC. It's more of a concept of the size of companies you're going to go after, but they don't match. They're a fraction, if that's helpful.
No, it definitely is. It definitely is. All of this has been incredibly helpful. We're so grateful to the three of you for sharing your knowledge with us. It is a difficult concept for some, including myself, but I think that you have really illustrated where this can take the sector and the market. So I really appreciate all of your insights. Thank you so much.